Hi there, Dave Keller here with Market Misbehavior. When I interview people, I love to ask them what their one chart would be. And that is, if you had one chart, just one chart, besides just a regular chart of the S&P 500, to give you a good read on the overall market environment, what would it be and why? So here's my one chart for today.
So today we're actually looking at market breadth in the form of the cumulative advanced decline lines. So market breadth at a high level essentially means market participation. When a stock index is doing a certain thing, market breadth tells you how many stocks are participating in that trend. So when we're looking at the cumulative advanced decline line, it basically takes every day the stocks advancing or closing higher than yesterday's close, and the stocks declining, closing lower than yesterday's close. And every day you get a net number of advancers minus decliners. You accumulate those values over many, many moons, and you get the cumulative advanced decline line. So here we're looking at the S&P 500 index on a closing basis. Then we have the cumulative advanced decline line for the S&P 500, for the New York Stock Exchange, for the mid-cap index, and for the small-cap index. So I like to look at cumulative advanced decline lines across the cap tiers, from the large cap to the mid-cap to the small-cap stocks. And what this shows you is which stocks are participating in the market trend. What we've seen over the last 6 weeks or so is this, after the initial V bottom and the pullback, you then have had the last 6 weeks of a continued uptrend of the S&P overall making higher highs. Based on what we've seen today, we've potentially here on Tuesday afternoon put in a lower high, and we'll have to see if we get follow through a break below that most recent swing low, which would suggest a short-term tactical downtrend. For now, it's just telling you that we're establishing a bit of a short-term peak. So the question now is, have we exhausted this bear market rally, and are we now beginning the next leg down? And I think these cumulative advanced decline lines are one way to answer that question. What's happened over the last 6 weeks is these cumulative advanced decline lines have gone higher, right? So they've continued a trend of higher peaks, higher valleys, or higher highs and higher lows, as I usually describe it. With today's sell-off, the S&P 500 is now right back down to the trend line if you connect the lows over the last 6 weeks in this advanced decline line. These breadth indicators haven't updated yet because it's right after the closures. They haven't updated yet for these other benchmarks, and this is why this chart is top of mind. It's why it's my one chart for today, because I want to see with today's sell-off and with the bearish engulfing patterns we've seen on the S&P, on the NASDAQ 100, on a lot of different stocks, even stocks that had recently broken to new highs, that suggests short-term weakness. And I'm going to be waiting to see if these cumulative advanced decline lines break down below these support levels. Now, what's happened is you've had this situation where this market has been perceived to be a large cap or mega cap led market. And over the long term, it certainly has been the case. If you look at the relative performance of the S&P versus the small cap index or something, the S&P has been a consistent outperformer in that relationship. But if you look since the market low in mid-March, late March, the number one out of these four buckets is actually the mid-cap index. Mid-caps have actually been strongest out of the lows. So it's interesting to see, what will be interesting to see is if you see these advanced decline lines breaking down through trendline support and then breaking now down through their most recent swing lows. And if this pattern of higher peaks and higher valleys reverses and you get lower lows and lower highs, that tells you that the breadth characteristics are transitioning from a period of strength to a period of weakness. So I could see a situation where the S&P 500 actually holds up, okay, maybe holds above 2,800 or 2,750, but you see these cumulative advanced decline lines starting to roll over. And then the very last thing that will happen will be the S&P actually breaks down through price support, but you will have already gotten that signal because of the weakening breadth in some of these, or weakening indication in some of these breadth readings. So my one chart for today is the market breadth in the form of the cumulative advanced decline lines for the S&P and for the other cap tiers. And again, I'm looking to see if these trend lines are broken, and I would bet, based on the bearish engulfing pattern that we've seen on the S&P 500 today, that that's most likely to happen in the next couple days to next week. For Market Misbehavior, this is Dave Keller. Have a great night.